Good afternoon and welcome to the DEKEL Agri-VISION PLC Q&A relating to the interim results for the 6 months ended 30th of June 2022. This session is expected to last about 30 minutes. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted any time using the Q&A tab just on the right-hand corner of your screen. Click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. Have the company review all questions submitted today and we publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Lincoln Moore, Executive Director. Good afternoon.
Good afternoon to all the participants. Thank you, of course, for your time. I'm sure you're really busy, so we much appreciate it, and we'll try and answer today the majority of the questions, but of course you can email us separately any other questions you may have. Today's focus is on DEKEL Agri-Vision's half-year results, 30 June 2022. My name is Lincoln Moore, Executive Director, and I'm joined today by Shay Cole, Deputy CEO. Yuval is travelling today. We had a number of flight changes yesterday, so hence the change for today, and myself and Shay taking you through this presentation. For those that are relatively new to the company, I'll just give a very brief overview. For all intents and purposes, we're going to focus on our two key business units at the moment. Of course, our general strategy is to develop a diversified agri-logistics business with a number of commodities focused in Côte d'Ivoire. We, of course, have the palm oil operation, which has been operating for a number of years and is the key part of the financial outcomes at present. And shortly joining that now, we're in the late stages of final commissioning of the cashew project, which we are hopeful is going to be a material contributor to the group from the next couple of months and certainly for the years moving forward from there. Just putting the summary results up for this year. We actually had a relatively good year. It's the first half of the year, actually, a record EBITDA, which actually, to be honest, probably even surprised us slightly internally because we tend to be focused on the fact that there's been such a weak volumes in terms of CPO production, which you can see in the first line, and clearly we'll tackle that as one of the questions. But of course, we've seen a period of very supportive prices, both in our CPO and also in our PKO, which has become an export business, which is together with relatively strong extraction rates, has driven the results that have been achieved, and pleasing to, despite the challenges, to deliver that EBITDA record result of 4 million. I'm going to now start going through the questions. There were a number of questions, and we tried to summarise them where we can, and in some sort of logical order, starting with volumes, production, revenues, profitability. So the first questions really relate to, I think, the most obvious thing is what's gone wrong with the fruit volumes over the last 8 months, and where do we see it going forward. So just to summarise very briefly, 2021 for the full year was a record year in terms of production. January 2022 was okay, and correct, the statement's correct. The last 8 months have been very poor in terms of fresh fruit bunches. Now, of course, we have our own internal experts, we have local experts, and we've received a number of, let's call them theories as to what has transpired over the last 9 months. I think some of the more meritorious ones were that there was something that triggered an earlier than normal harvest in the second half of 2021, which led to record second half production 2021, and therefore the fruit had been thrown off to some degree, and the trees were slightly stressed entering the high season. We have also had assessments that Q1 2022, very weak rainfall impacted the final ripening of fruit into the high season, which has some merit because bunch counts were actually quite good heading into February and March, but actual flowering and final fruit in March and April was much weaker than anticipated. And we had more general answers that there's typical seasonal variations, i.e. a very strong year can often be followed by a weak year. From our point of view, there are factors that can affect it up to 2 years. So what we try and do with our shareholders is to report as much as we can. I think we're the only one who reports monthly, and I think we'll continue to do that and provide as much guidance on the following month as we can. I think is the best way, rather than theorising too long into the future where we can clearly get it completely correct or slightly correct or completely wrong. So that's the way we will continue there. In terms of how do we know that it was not just us, is an excellent question. So once a month, the local group called AIPH collects the quantities of fruit data from ourselves and all the other players in Côte d'Ivoire. So that's still reported monthly. So we can see that all players in our region, particularly in our side, the eastern side of Côte d'Ivoire, were dramatically affected by this weak fruit period through the first 6 to 8 months of the year. Pleasingly, we can see it's picked up a little, or starting to pick up a little, as we indicated in the last announcement. But we also, just to add on to that, we also can talk to our partners and people we know in the western side of Ghana and in Liberia, and it's no doubt been a regional factor. In terms of guidance going forward, that was a question. As I said, we'll continue to provide what we can each month. We anticipated in the 10 September numbers that we'd see some improvement from August. And when we report at the 10th of October, we'll provide any early guidance on October itself. In terms of moving on from fruit, probably I should add one more point to fruit. I think what we do know generally is there has been significant planting in our region over a number of years. So generally, we think that there will be continued growth in fruit, but as I say, I think from our point of view, we'll continue the monthly reporting, and I think the guidance in early January will obviously, in February, will be critical to our results in the first half of next year. Shay, there's a question that's come in relation to gross margin, that it has increased substantially this year compared to the last couple of years. Extraction rate was mentioned as a factor. Could you just provide a little bit of an overview of gross margin?
Yeah, definitely. Thank you, Link. The gross margin improvement is one of the factors, as mentioned, is the extraction rate. Extraction rate is driven by both two factors. One is the quality of the fruit, which can vary from one period to the other due to agronomic reasons. And the second is the processing or the efficiency of the mill. We made efforts to improve the process in the mill, and we renewed part of the oil separation process, mainly the decanter that was replaced by a new one, which we believe improved a bit also the extraction rate. Another reason for the high extraction rate, for the higher margins, is of course the prices. The higher the prices are, the margins are higher. And during the first half of 2022, we enjoyed high prices, which of course contributed to that. As Lincoln already mentioned, it is now softened a bit, but it's still in high levels. With regards to the mill efficiency, I would like to point out now that we are going through a very extensive maintenance program, taking advantage of the relatively quiet period in order to get ready for the next ramp up of capacity. With even an external assistant of making sure that the maintenance and the preparations are well advanced.
Yes, exactly. I don't think the actual capex itself has changed significantly, but certainly we've had fresh eyes look at the mill and do a fresh assessment of the entire mill. Obviously, we want to make sure that with fruit ramps up as we expect in the first half of next year to typical levels, that we have the mill operating as well as possible. In terms of the next question, thanks for that, Shay, is about CPO prices and what do we think about CPO prices in the next 12 months. Prices at the moment have continued over the last 6 months to sit around 1,000 to 1,100 euros per tonne. I do note that I think the last 3 days with the general macro markets having significant turbulence, the price came back to about 950 euros today. What I would say is, even at 950, this is a very, very, very good price for us. I think we're comfortable prices even as low as 750 euros, but certainly anything from 800, 850, 900 above is very supportive. It's very difficult to predict. We're coming out of the South Asian palm oil high season at the moment, so typically supply levels start to drop off at the end of the year, but you have so many other overlaying factors. You have China demand question marks due to the continued lockdowns. You have Indonesia, which is the largest producer, continuing to play with export levies, which are impacting export markets. We've obviously got sunflower oil out of Ukraine, which is uncertain, and just generally supply chain logistics worldwide continue to be suffer disruption. So we would be we're reasonably confident that prices will remain at what we think is very good levels, anything over 850, but certainly there's no reason why we won't enter the high season at 950 to 1,050 euros per tonne. Moving on to the cashew operation, there's obviously been a number of announcements saying we're closer and closer to ramping up and moving to full capacity. We'll announce again on the 10th of October, but can you provide any guidance as to how this is tracking?
Yeah, definitely. Yes, we are now at the final stages of installing the last components of the mill, being some elevators and conveyors and some additional shelling machines and so on, which will make the process more continuous, which will allow us to ramp up capacity in the next few weeks. Our aim for next year is to process approximately 10,000 tons of raw cashew nut, and by the end of these few weeks, we'll be at a level that we will be able to do so. So it's currently on its track, and we will complete it in the next few weeks, reaching this initial aim capacity.
And now, obviously, it's hopefully will certainly be a significant milestone for us. But now we're moving to the required capacity for next year to do the 10,000 shay. Just what are we doing at the moment in terms of the question was relating to the sale of cashews?
Yeah. Okay. So we are producing now at lower capacity, of course, and we started selling locally, both locally and for international customers, aiming to we are starting to build our relationship with these worldwide customers. One of the main components in parallel to increasing the capacity and having the ability to provide a larger capacity to these customers is to complete or the certification of the food standards and food safety, which we started in parallel to the full commissioning of the mill. We are aiming to complete it early next year, in line with our production. So with both of it, we both building the capacity, the relationship, starting to build the relationship, and having the right certification and capacities. We are aiming next year to sell mainly to leading customers worldwide at the cashew market.
Yeah, so I think fair to say that we will sell initially to a number of customers, and obviously then be hopefully in a position to drive the best possible price when we reduce it down to a more appropriate number of customers, maybe 1, 2, or 3 shay.
Yeah, correct. Now the sales are basically based on spot, which is in smaller quantities, but this is correct. In the going to the worldwide customers and increasing the capacity, it will be more like a ongoing relationship with a orders in advance.
Okay, thank you. Next question, moving on to RSPO certification, as to where we're at and to provide an update. Yes, good question. There's really broken down into two processes. We have the process to certify the mill and the process to certify our own estates. The mill has been pre-audited and is ready. Has been ready for certification for quite some time. So I'm talking, in excess of a year. Ideally, what we want to do is do the audit of the estates and the mill together, and it's been the estates that we've been waiting on some clarification points on. The way it basically works is you have RSPO, which is Malaysia-based, and then you have each country has its own application of the RSPO standards. Côte d'Ivoire has very clear rules and processes for companies that are predominantly company-owned, estate-driven, and all very, very small farmers. And we're slightly unique in that we are company estates of around 2,000 hectares are a number of smaller plots, so they share some of the characteristics of small farmers, and also those plots we own in partnership with the landowners and small farmers. And so the rules were not clear as to how they would be applicable to us under the initial guidelines for the country. So we've been waiting for clarification, and pleasingly we have received that clarification now, which sets out the process to conclude. Basically, there's two reports which we've commissioned and are now being undertaken. One is a land use change analysis assessment, and the second one is a high conservation value, high carbon stock assessment, both going on now. And what we're told is once those assessments are completed, which we're hoping to do before the end of the year, we can then move to actually organising the auditor to start work. So pleased to provide that clarification, and please also to reconfirm that the mill certification, or the mill is in readiness for certification, has been for some time. Shay, moving on to we drew down the remaining sum of the bond from Côte d'Ivoire. That was just over 9 million euros. Why did we do that? Is one of the questions, and how will it be used?
The reason for doing it is moving part of our external debt to a local currency, being the DEKEL loan that we already announced partial repayment of it, and also fixing the interest rate, which was a variable interest rate, into a fixed rate, knowing that now the markets or the interest rate are going up. So securing a fixed rate, which we have on all other loans. So we already announced that we repaid half of the DEKEL loan. We are currently negotiating with them additional terms. The additional amount of the bond withdrawal, the aim is to utilize it to build the cashew working capital, and to be able to purchase the raw cashew nut with relatively comfortable interest rate financing, to build the capacity at the beginning of next year, which is the high season of the cashew nut is approximately from February to May, and to be able to purchase enough raw cashew nut to support the operation that we plan to.
Thanks, Shay. There are a couple of questions maybe worth directing now. So what's our exposure, in summary, to increasing interest rate? In essence, the large majority of our debts now are fixed around the 7 to 7.25% rate, and also the large majority in local currency. So we are essentially locked in, and those debt facilities typically have got 7 years, 10 years. So that was one of the reasons we did, as Shay did that drawdown, is to lock in all of our debt around those levels, knowing or working on the basis that interest rates were going to materially rise, which of course has been the case, but we are locked away there. The second question about Shay, repayment terms of the loans. I mean, each loan is different, but in general, a large majority of our palm oil debt is now fixed with a 3-year principal grace period and with a 7-year tenure. So essentially, majority of our loans are interest only for the next 3 years, and that's intentional to provide the cushion for the business as we ramp up the cashew operation. So clearly, the idea being is clearly to repay debt, but to allow room to build the cash position of the company from the palm oil and the cashew business, and then be in a position to look to more aggressively repay debt. Shay, anything to add?
Yeah, just to mention that the initial bond is now being repaid. Some of it is due to complete next year. So basically, it's a combination of several tenors. Some of the loans are already at the end of their lives. Yeah.
Thank you. Next question, and there are a lot of questions coming through on the screen. We'll get to profitability drivers for next year. Clearly, the palm oil business is still going to be the larger of the two businesses, and assuming prices of 800 euros plus a ton, hopefully more similar to the 1,000 euros, which is not unreasonable at all, is the goal there. But just a normalisation really of the fruit levels. Of course, we did over 4 million EBITDA from the palm oil business in the first half last year, with fresh fruit volumes down 40%. So the number in terms of EBITDA off the palm oil business, somewhere between 6 to 8 million, with normalised fruit and prices remaining relatively strong, is very doable. And of course, in the first half of next year, we should start to see a profit contribution from the cashew business. So there's strong expectation internally that we'll see a strengthening of the profit line in the next H1 2023 numbers. Next question is, do you need to raise money? Do you need to raise money, Link? And I saw one on the board that sort of talked about, would you guarantee raising money not at prices lower than 5p? What I say is we've got no intentions to raise money. The balance sheet and cash position of the company has been strengthened from the palm oil operation, delivering close to 5 million of operating cash flow in the first half, and the post-period end bond drawdown is added to our cash position. Of course, the debts related to that are all long-term in nature, with significant periods of principal grace. So we would expect the cash situation of the company will continually improve, and there is no intention to draw down money. In terms of the other new projects, no, there's no intention to, at this stage, start Project 3 or to divert capital to clean energy. I think that the entire focus is on the cashew operation, and potentially the ramp up of that operation after a successful 12 months of processing next year. And the last one, stock price dropped down under 3p again. Disappointing. Where do you think it'll be this time next year? I think for those who do follow cycles, they would always see each year our stock price tends to be, all things being equal, at a lower end of a yearly cycle, and that's normally driven by the fact we're in the low season for the palm oil business, and what you normally see is a pickup as we move towards the high season. I think clearly that people will watch carefully as we move towards the end of the year. If palm prices remain at these high levels, the cashew starts tracking to deliver full 10,000 tonnes next year, and early guidance on fruit levels. I think it's not unreasonable that I think in February this year, we were before the fall away in fruit volumes were at 6.5, 7p. So that's where we would be expecting to be by early next year with a reasonable economic, I won't say economic conditions, but reasonable assumption support on the key KPIs. Okay, so just go back to the questions, and we'll just try to address some of them. So Shay, just around the cashew business, what do you think there are risks at the moment in terms of ramping up to full production over the next 2 to 3 months?
Yeah, our full production, full capacity.
I mean, the 10,000 tons of processing.
Yeah. The 10,000 tons we will be the at the next few weeks. Potentially, the full capacity of the mill can reach even 15,000. We are aiming to 10,000 next year, which is something which is achievable. And at the next few weeks, we'll be at a capacity that can support these numbers for next year. With a potential to increase based on the current installed machinery on the mill.
There are questions around the basic cashew economics at the 10,000 tons of raw cashew nut processing. We were aiming for revenues of somewhere between 10 to 12, 13 million revenue, with a gross margin line in our forecast at the moment that's sitting around 25 to 30%. There'll be some key KPIs that you'll be able to report when we have smooth production. One of the key ones is the whole versus broken cashew ratio, which the mill can do over 80% whole. I think we've assumed in our market numbers at 65%, so that could be quite critical. And of course, the sales price of cashews as we move into early next year will be critical. At the moment that the forecasts essentially match the prices. Are there opportunities to make local acquisitions, or you're looking for organic growth? Mainly organic growth, I would say, rather than buying existing businesses. Moving down. Again, about the cashew gross margin. So yes, so somewhere between 25 to 30% is what we're aiming for. We feel the margins can be slightly better than the palm oil business, which has been more ranging around 20 to obviously a bit higher this year at 25%. Questions around the RSPO timing. I think what the two final reports I mentioned, we expect them to be available by the end of the year. The timing of it is out of our hands to some degree in terms of booking an auditor and getting an auditor out, albeit now that we've moved post-COVID, booking timetables are improving, whereas they were very, very slow and almost non-existent in 2020. So I think the next announcement we will try and make to be as transparent as possible is confirmation of these two reports, and expect that before the end of 31 December, and guidance as to the timing of the audit, undertaking the audit. General question saying we're satisfied, suggesting that we're satisfied with where the company is at the moment. I certainly wouldn't feel that way at all. We've been as worried as anyone about the weak fruit period, and have analysed it and done, taken extra steps this year to make sure that everything that we can control, particularly around the milling process, is as well maintained as it can, to ensure that when fruits do increase, we expect them to increase, things will go well. Certainly been on the cashew side incredibly frustrating with the delays from our suppliers. We've done a number of things to fast track that process, which initially everything was going to be consolidated in Italy. We ended up doing a number of imports from various countries directly, and in some cases paid for by ourselves directly to speed up the process. We took substitute Vietnamese shelling machines, knowing we'd be delayed on the shelling machines. So where we can improve the situation, we have done everything we can, we believe. And certainly we think it's all about setting up for the two businesses working in tandem. So let's see where we get to by the end of the year. And I think with two businesses going and working in tandem, there's no reason we can't push 50 million revenue for the first time next year, which is a statement that we've put out as an objective. Last question I can see so far from what you've seen so far in September, how do you feel about CPO fruit recovery? We got to be careful. Obviously, need to wait to when we announce, but we indicated we're seeing an improvement from August, and that's correct. It will, I mind you, September, October, November last year were, I think, almost record amounts for each of those months. So we'll be comparing against very high levels in the previous year, but the shortfall that was upwards of 40-45% on fruit, we don't expect that to be the case in CPO production in September. We'll see a material improvement and hopefully a continued tightening of that differential in October. Again, about the new projects, ensures that new investment will be delayed until we get to see the benefit of the first two commodities. Yes, this is a short answer to that. Until we have a vision of at least 12 months of smooth production on the cashews, we won't be looking at additional investments in a third commodity, or certainly investment in clean energy, which we've always said would be more of a medium-term objective. I think I've answered.
I was going to say, I think you've covered off pretty much everything that we've had through, and of course, if there is anything further, we are just coming through that half an hour mark. Anything further, of course, both you and Jay will be able to review those. We can publish responses where appropriate to do so. So thank you very much indeed for taking those questions and updating investors. And I'll just remind everyone that a copy of the presentation and the slides will be available on the Investor Meet Company, and also a transcription of the Q&A. Lincoln, perhaps before redirecting investors to provide you with their feedback, which I know is particularly important to you and the team, if I could just ask you for a few closing comments, please.
Yeah, so first of all, thanks for everyone for joining. I'm a small cap investor myself, and I know it's been a really challenging time across the market, both in small caps and also for people exposed to pensions and in index funds as well. So much appreciated. I think within food and palm oil is certainly a sector that is showing a robustness at this time. I don't think it's transpired into full pricing of not just ourselves, but the other palm oil players, REA, MP Evans, Anglo Eastern, which I personally hold stock in all of them, and feel confident that these are good cash producers to hold in tricky times. I mean, clearly in terms of DEKEL, it was been a challenging 6 months, but to still achieve record EBITDA in the first half was great. It's going to be certainly the second half was unusually terrific last year, so we'll be challenging to meet those numbers in the full years. But the way we're setting up for the high season next year, any normalisation in the fruit volumes and reasonable prices clearly gives us in a position for the whole business to do even better than we did in this half. And then clearly we're confident that the cashew business, albeit the frustrating delays, is going to be a significant contributor to the group. So always happy to take questions offline, do meetings in London, and I'll be attending the Momentous event, it's a retail event on Thursday the 13th at this stage as a guest. So always happy to talk to people face to face as well. And please, for any comments and feedback.
Fantastic. Thank you, Lincoln. Shay, thank you indeed for updating investors today. Can I please ask investors not to close the session, which will be automatically redirected to provide your feedback, and all the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of DEKEL Agri-Vision PLC, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you and good afternoon to you.
Thank you.
Thank you.